Good morning. This is Arlan Suderman, Chief Commodities Economist at StoneX with the morning update. It's about 8:45 a.m. Coming to you from the trading floor as we look at this morning's commodity markets. We're generally seeing crude oil trade a little bit higher, close roughly around 1% higher, as the market continues to kind of consolidate and range between $60 and $64. A little bit of upside bias there, trying to balance out the effects of the tariffs and trade sanctions on Iran tightening up supplies versus OPEC planning to increase supplies as we get into next month, balancing that with the fact that below $60, $62 range, we're really starting to shut down production in the shale oil fields as we drop below cost of production. So getting some general support there. As we look at the grain and oil seeds, we saw some modest weakness again in the hard wheat markets overnight, with improved moisture in the central and southern plains as well as in the northern plains, both in recent days as well as in the forecast. We need to see that continue to verify. This is a critical time for the development of the hard red winter wheat crop as we're in the heading phase, the reproductive phase for the crop. So we need to see that moisture continue to come. Subsoils are dry in the region. Subsoil is very dry in the northern plains as well. And this is the critical planting time for the hard red spring wheat crop going forward. But right now, that moisture is in the forecast. And so a little bit of weakness there. Corn and soybeans getting a little bit of support today. Soybeans continue to be well supported overall, but bumping up against some areas of chart resistance, and so we'll test out the sentiment of the market. There's real strength in the complex has been in the soy oil market, where we're certainly coming up against some areas of chart resistance, probing above some modest resistance this morning, but pulling back a little bit from that. Is really the support coming from chatter in the trade that the EPA could announce the new RVO requirements, perhaps as early as today or tomorrow. Now, we're skeptical of that. The industry generally expecting those announcements to come before Memorial Day, but we do have to respect the possibility that it could happen today. Now, as we look at the biomass diesel mandate, the industry group that was composed of people from the biofuel industry as well as big oil, came together and recommended to the EPA that the biomass diesel production mandate be at 5.25 billion gallons. That's a massive increase from the current level of 3.35 billion gallons, but it better reflects where the infrastructure development of the industry is at. If you look at EPA's past patterns and how they formulate where the mandate should be based on domestic feedstocks, we would estimate that they would end up coming in somewhere between 4.25 and 4.5 billion gallons. That would still be a substantial increase, and I think still supportive, although we could see an initial disappointment in the market, and then I think we would see some sense of, oh, wow, this is still a big increase. And so that would be seen as positive longer term, I think, and of course, ratchet up beyond there. But we're also seeing some indications that the Trump administration may be changing that formula a little bit and try to provide support for the infrastructure that's already in place, and maybe get something closer to 5 billion with an outside chance of maybe something above 5 billion gallons. So we'll have to wait and see on that. I do still expect the Trump administration to support ethanol blending in gasoline to work its way back up toward 15, I say back up, but work its way up to 15% blend in gasoline, not as a mandate initially, but allowing it to move in that direction as capacity is able to expand, et cetera. And so I do expect that to happen at some point. We're not sure on the timing of that announcement. We're also not sure where EPA is going to end up on small refinery exemptions or on the 45Z guidelines that the Biden administration kind of left undone when they left office. So those are going to be some things that could have some significant implications. Otherwise, we're still leaning to the very dry side in Brazil's safrinha corn growing areas, although the rains have been timely enough to maintain NDVI scores at historically high levels. So concern about the crop right now is relatively low as the crop goes through pollination. And as we look at planting conditions in the Midwest, they look ideal, frankly, going forward, as dry areas have been and or are receiving rains, and then the pattern pretty much dries out to allow that planting to proceed. And so not really a story there other than it looks like the crop's going to be going in well, and we should be able to get the acreage planted in a timely fashion. So overall, still waiting on the Trump tariff situation. There had been rhetoric, and of course, we got good support from the stock market from when Trump came out and said, no, I have no plans on firing Federal Reserve Chair Jerome Powell. He clearly heard from the stock market that that would not be a smart move to do and backed off on that. That reassured the market. There was also statements coming out of the White House about possible concessions to China, cutting the tariffs that are currently the reciprocal tariffs that are currently at 145%, cutting them back to somewhere in the 50 to 65% level. But that clarification indicating, well, that's not happening now. It's not something President Trump's doing now, but perhaps that's a part of the early negotiations when that happens, which right now there may be some discussions that are informal happening, but there's no formal discussions happening. That seems to be clear at this point. So the market overall just kind of consolidating and buying time. Tomorrow we'll be going into a weekend when headlines continue to flow, so it'll be interesting to see how we close out the week. But the ag industry really watching and waiting to see if we get those RVO announcements that come. So for today, that's a wrap up on the morning commodity markets, and I hope you have a good day.